Before we begin, just a quick note. This podcast is produced by qualified financial professionals and is intended to share general information and insights to help expats better understand common financial topics. However, everyone's circumstances are different and regulations can vary by country, so nothing discussed should be taken as personal financial, tax, or investment advice. If you're considering making financial decisions based on anything covered in this episode, we recommend seeking professional advice tailored to your individual situation.
Hi, I'm Georgina, and you're listening to Expat Money Matters. At Chase Buchanan, we know your time is valuable, so we've taken our signature weekly market update email and turned it into this easy-to-digest audio briefing, so you can stay informed while you're on the move. Here is your weekly update for the 26th of August, 2026.
Good morning or good afternoon, wherever in the world you find yourself this week. This week, a trade deadline between Canada and the United States became a real tariff dispute. United Kingdom inflation moved higher, and pressure in the United States bond market raised fresh questions about interest rates and borrowing costs. For internationally mobile families, these are not simply market headlines. They can affect the currencies in which you earn and spend, the value of cross-border investments, the cost of borrowing, and ultimately whether the assumptions behind your financial plan still hold. Here is the week in short, and where it might touch your own plans. First, a quick note on timing. The email version of this update was researched and approved on Tuesday, the 25th of August, 2026, and checked again on Wednesday, the 26th of August. It includes Canada's confirmed counter-tariff package and the latest United States growth and inflation figures. NVIDIA's results were scheduled for after the United States market closed and were not available at the time of recording. They are therefore not included. Canada and the United States fell out over trade. With talks stalled, the United States imposed 50% tariffs on a range of Canadian goods, from clothing and furniture to beer and hockey equipment. Canada has now confirmed its response, and from the 8th of September, counter-tariffs of 15%, 25% and 50% will apply to around 700 United States products covering approximately 27.6 billion Canadian dollars of annual imports. The affected goods include steel, aluminium, clothing, electronics, machinery, and prepared foods. Canada also announced a support package worth 7.5 billion Canadian dollars for businesses and workers affected by the dispute. The situation escalated further when the United States threatened 50% tariffs on Canadian-made cars, trucks and automotive parts from the 1st of January 2027. That measure has not yet taken effect, but it introduces another potential risk for Canada's highly integrated automotive sector. Prices were already rising before this, with annual inflation reaching 3% in July. Canadian manufactured product prices also rose sharply, led by energy and petroleum products, according to Statistics Canada. The concern now is that higher costs and weaker trade could place pressure on the Canadian dollar. If you earn, spend or invest in Canadian dollars while holding income or assets in another currency, that is the part to watch, especially with the Bank of Canada deciding on interest rates on the 2nd of September. For anyone planning to move to Canada, this may also affect assumptions about the cost of living, property purchases, borrowing, and the value of capital being transferred into the country. Now to the United Kingdom. Inflation ticked up, but the headline oversells it. Inflation rose from 2.6% to 2.9% in July. Look underneath, though, and the picture is calmer than that number initially suggests. Core inflation held steady, services and food inflation both eased, and the increase was principally driven by gas, electricity and housing, according to the Office for National Statistics. That may be enough to keep the Bank of England cautious about cutting interest rates, but it does not suggest the broad surge in price pressures that the headline figure might imply. For expats, the practical story is sterling. If you draw a United Kingdom pension or rental income but spend in euros, Canadian dollars or United States dollars, a shift in the pound quietly changes what lands in your pocket. United Kingdom interest rate expectations can also affect the value of bonds, cash returns and borrowing against British property. It may therefore be worth checking whether the balance between your income, investments and spending currencies still reflects how you live today. In the United States, long-term borrowing is still the story. The Federal Reserve held interest rates again, although 3 members preferred an immediate increase. The recently released minutes also showed that many policymakers believed further tightening could become necessary if inflation did not decline. Figures released on Wednesday showed that the United States economy grew at an annualized rate of 1.5% during the second quarter. That was unchanged from the initial estimate, but down from growth of 2.1% in the first quarter. Consumer spending was stronger than previously estimated, although higher imports weighed on overall growth. The Federal Reserve's preferred measure of inflation also remained elevated. The PCE price index rose by 3.7% over the year to July. Core PCE inflation, which excludes food and energy, stood at 3.3%. The combination of slower headline growth, resilient domestic demand, and persistent inflation leaves the outlook for United States interest rates uncertain. Meanwhile, the United States Treasury is doubling the maximum size of its buybacks of longer-dated government bonds to support liquidity in the market. This is not quantitative easing, but it is a reminder that the cost of long-term borrowing is being influenced by government debt and bond supply as much as by the Federal Reserve. These borrowing costs feed into everything from mortgages and bond portfolios to annuity pricing and the value of the dollar. If you're American or hold United States assets, remember the familiar complication. An investment or financial structure that appears tax efficient where you live may be treated very differently under United States rules. Next, 2 deadlines if they apply to you. In Belgium, the 31st of August is the final general deadline for affected Belgian tax residents to opt out of automatic withholding under the transitional arrangements for the new capital gains tax. Some banks and brokers have set earlier cut-off dates, so it is worth checking directly with your provider. In Spain, non-resident property owners face administrative changes to Modelo 210 from 2027. These include revised filing periods and a new breakdown of deductible expenses. This changes the reporting process rather than the underlying tax rate, but it is worth flagging to your accountant so that the correct information is prepared on time. The deadline for declaring 2025 imputed property income remains the 31st of December 2026. And now the one to mark in your diary: pensions and United Kingdom inheritance tax in 2027. Here is the change we keep coming back to because it could easily catch people out. From the 6th of April 2027, most unused pension funds and certain pension death benefits will be included within the value of an estate for United Kingdom inheritance tax purposes. Death in service benefits paid from registered pension schemes will remain outside the new rules. Leaving the United Kingdom does not automatically switch off United Kingdom inheritance tax exposure either. Since April 2025, the treatment of overseas assets has generally been based on United Kingdom residents' history rather than domicile. Long-term United Kingdom residents may remain within the scope of United Kingdom inheritance tax on worldwide assets for up to 10 tax years after leaving. Most estates will continue to have no inheritance tax liability. However, a pension you had always thought of as sitting neatly outside your estate may now need to be considered alongside your property, investments, and other assets. That is a far easier conversation to have now than to leave to the family later. Finally, the week ahead. Nvidia's latest results are due after the United States market closes today on the 26th of August. Central bankers meet at Jackson Hole from the 27th of August with Federal Reserve Chair Kevin Warsh due to deliver a closely watched speech on Friday. The Bank of Canada decides on interest rates on the 2nd of September, and Canada's counter-tariffs take effect on the 8th of September. None of this means rushing to change anything. It simply means that the assumptions behind your plan around currencies, investments, pensions, and your estate may be worth a fresh look.
And that wraps up this week's Market Snapshot. If you'd prefer to get the information before it's published here, you can sign up for the update directly on our website. Just visit chasebuchanan.com and subscribe and get the update delivered straight to your inbox, giving you a head start on the week. Thanks for listening to Expert Money Matters. I'm Georgina. Join us next time as we explore money matters for your life abroad.